Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. In this week's video, we're going to be summarizing the third week of September, and what a week it's been. So if you look at where we ended up last week, it was at 126,547. And this week we end at 129,985 for a 2.7% return, which equates to almost £3,500, which is unbelievable. So really happy with how the journey is going. And the main reason for these gains was this. So the Federal Reserve in the US lowered key interest rates by 0.25 basis points. So a 0.25% reduction. It's the first time they've lowered interest rates for the year. Now, this was widely expected from the market, so it wasn't amazing news, but it needed to happen. If this didn't happen and the rates held, or for some reason they were hiked, then the market would have crashed. But it happened, and also what was really important was the guidance given by the Fed in terms of future cuts. The Fed officials indicated they expect 2 more quarter-point rate cuts this year. So essentially there's expectation that they'll reduce the interest rates by 75 basis points by the end of the year. And as you can see, the market reacted really well to that. I thought potentially it would be a sell the news event, because if you look at the lead up to the rate cuts, which happened here, you can see that the market was going up, anticipating it. And I thought potentially it would be a sell the news event. It could have been, but the guidance given thereafter was also positive. So after that, the market reacted very, very well. As you can see from the month, I'm up over 10% for a £12,000 gain. And if you look overall for the portfolio, you can see the compound effect is really taking effect right now. So I'm up over 90% for almost £40,000 gain. As you can see from the beginning, there was a long time where I was down or slightly up, and my deposits and my gains were kind of correlated, including certain parts where I was down almost 7% here. So this was in mid 2023, where I was down 6.8%. So I contributed 45,000 and was at 44,000, so I was down. And the portfolio really started to move around March 2024. As you can see here, I started moving up to some decent gains where I was up 34%. Got to a peak just before tariffs were announced of 70%. As you can see, the market really crashed off the back of that. I did not sell. I held because I knew it was a negotiating tactic, and the market recovered. And now we are where we are, where I'm up almost £40,000. So really, really good. Now, off the back of that, I thought I'll trim a couple of stocks just to lock in a bit of profit. So the first stock I decided to trim was Google. So I ended up selling just over 8 shares for $249.29 a share. I bought the shares at an average cost of $162, which netted me a £453 gain for a 53.7% profit. So really happy with that. Google has become a very big part of my portfolio, and I just thought I'll just take a profit off the table just in case the rate cut news was not as good as expected. So took that off. So the second stock I decided to take some profit on was Tesla. So I sold these for over 100% gain. I sold just over 3 shares for $419 a share. My average cost was $207. So for another £472 profit. So I was really, really happy about that. Taking my overall profit to over 3K for sales of stock this year. And the final stock that I sold was a Rio Tinto. Now, if you're a subscriber and you followed my journey so far, you know that Rio Tinto has been down in my portfolio for a very long time. It was a legacy holding from when I was a dividend investor, and I was just waiting for a recovery for me to sell it because it's had a very rough time, this stock, and I don't think it's worthy enough to belong in my portfolio, really. I thought, shall I wait? And then there was this opportunity which I wanted to take advantage of. And as you can see, the rationale here is to buy Grab. So I'm going to go into that shortly. But essentially, I sold Rio Tinto for a loss. So I sold just under 63 shares for an average price of £46. My average cost was £52 for just under 13% loss. Obviously, nobody likes to see a loss on the balance sheet, but sometimes you just have to let go. And I'm hoping that my position in Grab will get those losses back for me. So let's just take a quick look at Grab Holdings. So essentially, it's like the Uber Eats of Asia. So they do food deliveries, ride hailing, and also they have a financial services arm. This is a very up and coming company, and it allows a bit of added diversification to my portfolio, as most of their operations are within the Far East. Now, as you can see, the revenues are growing. In the most recent quarter, they have become profitable. So hopefully this continues. Now, if we look at free cash flow numbers, $775 million for the last year on revenue of 2.8 billion. So that's really, really good. This is something that I look for. Good free cash flow within a business. Now, the market really rewards companies that are just about to be profitable or just have become profitable. And as you can see, their share price is up 75% in the last year. Now, even though $6 doesn't seem particularly expensive, because some of the shares that I own are $250 like Google per share, or Microsoft, which is at $500 per share, this is actually still quite expensive because the PE ratio is pretty high at 232. Now, this is expected for a company that has just turned profitable. But again, these are the kind of companies that can really reward you. So in the end, I've decided to open up a position of 1,000 shares, which I got for an average cost of $6.09. As you can see, it's at $6.38 already, which means I'm up 6% already. So a good start. Obviously, you don't judge a stock by how much it's gone up by a week. So we're going to judge it over the long term. But this is a company that I'm excited about. What I also like about this company is that it's founder-led, and founder-led companies have historically shown really good returns. So that's another reason why I'm bullish on this stock. Now let's look at the dividends that have come in for the week. And there's been one from Google at £14.18. Google has been a star performer recently. We're going to go into that a little bit later on, but it's really impressive that it's also started to pay a dividend as well as top of the gains that it's gotten. So in terms of dividends for September, we've had Visa at £13.22, Kayla at £1.13, Microsoft at £9.27, and Google, as I mentioned, at £14.18. So overall for the year, that takes me up to over £1,000 in dividends. So another milestone reached. My numbers aren't going to be as good as the dividend tallies that I used to get in the past when I had more dividend focused stocks. But as you saw in the trajectory of my gains, growth stocks has far outweighed what I would get from dividends for the whole year. But it's still nice to receive them and reinvest in what stocks I want to buy. So if you've enjoyed the content so far, please, if you can, just give the video a quick like so other people can see it. It really helps the channel grow. If you want to see how the portfolio ends up, then subscribe. As you can see, I'm very transparent with what's happening. And let's go on this investing journey together. So up 2.7% for the week for the overall portfolio. So that means most of the stocks are going to be up. If we look at the positions in total, there's 7 positions that are down, with the biggest loss at 4%. And in terms of the biggest gainers, you got ASML at 14.53. We're going to go into this a little bit later. Hood at 8.24%. Tesla at 7.47%. My new holding Grab up at 6.33. So overall, a really solid week. So let's have a quick look at the positions themselves. So you got Google which has been performing fantastically in recent times, up almost 50% for a £6,000 gain. So it's the first company that's gone over £6,000 in gains. Even after I trimmed it, it is close to £20,000 and getting closer to 15% overall holding. As you can see, for the last month, Google's up almost 30%. So I'm really, really happy with this. It's a company that I've been bullish on for a very long time, and it's paying off. And as you can see, I have just under 100 shares with an average cost of $162.59. Now, number 2 in the portfolio is a recent riser, Robinhood. As mentioned earlier, I had a really good week, up 8.24%, especially after S&P inclusion, which the money is going to start rolling in from next week, I believe. It's rising off the back of that. My position is 100 shares at an average cost of $106.98, and the current share price is $124.51. So doing really well on that, really happy. Imperial Brands is my next one, up 70% on that holding for a 3.8k gain. MasterCard and Visa, I always rank these together. They amount to about 14% of my portfolio right now. These are quite solid holdings. They're not going to be the biggest gainers, but they're not going to be the biggest losers. I expect them to net me about 15 to 20% per annum, which is what they've done historically. And they provide a good backbone for my portfolio. Meta, up 30% for a 2k gain. Had an okay week at 2.82%. Average cost of $584, and it's currently trading at $776. They had a recent investor event where Mark Zuckerberg showcased the new Meta glasses, which during the live presentation, there were a couple of glitches, which Zuckerberg was not happy about, but it happens. And I like the fact that they're willing to showcase a product live. That means they have confidence in it. Even though the fact that there was a glitch, it means they feel that it was ready to showcase to the market. And whether it's going to be a popular product, we shall see. I mean, at the moment, it's still in its infancy, but in the long term, it might be something that the market likes. But they're launching it at the end of the month, so let's see how that does. Now, the next position, which I'm really happy about, is almost at break even now, Hims. So it had a decent week, up 3.78%. And there was a period where I was in profit overall, but it settled at a slight loss. But I'm liking the trajectory of this stock. Unfortunately, there's a lot of short activity on this, and when it starts doing well, there's some piece of news that is planted somehow. Sometimes it's old news that's regurgitated, and then the market reacts to it. So it's going to have a fight on its hand, this stock, but it's going in the right direction. So I have a £7,000 holding, so I'm just slightly down on that now. Microsoft up 30% for a 1.6k gain. Carnival up 116% for a 3.3k gain. Nvidia up almost 60% for a 2.1k gain. Tesla, now I trimmed it earlier and it's been on a tear recently. This might be the 4th stock which gets above 100% in my portfolio. The ones that initially were Carnival, which is still up over 100%, Nvidia and Broadcom, which I then trimmed, so the average cost went down. But this might be the 3rd one. Up 7.47% for the week. For the month, up 30%. It was up quite a lot when it was disclosed that Elon bought a lot of shares, almost $1 billion worth of shares. Now, when inside a seller stock, it might be for many reasons. Some of the times, these people get a nominal salary of $1, and the main way that they make their money is through stock sales. So it doesn't always mean anything, but when an insider buys stock, it's usually a bullish sign. So especially with the amount that he bought, people are excited about it. So it could be that the robotaxi results are doing far better than expected. We don't know yet exactly, but Elon thinks that the future trajectory of this business is good. So that's a good sign if you're a Tesla holder. And although I trim some profits because it's still quite a volatile stock, in the long term, it should do well now. Oscar Health up 15% for a £766 gain. Now, I haven't added any additional money to the portfolio, which I will do. I always said that I was going to buy at the end of the month. And I'm looking at United Health. It might be a position that I might bring into the portfolio. So I think the insurance sector is on a recovery. And as you can see, I'm doing okay on the Oscar Health holding. Broadcom up 77% for a 2.4k gain. Grab, my new holding, up 6% already, which is really good. Now, we're not going to expect that every single week, but it's a good start. Because normally when you buy a new stock, it usually goes down because of the fees and everything. And it takes a bit of time for the stock to just naturally go up. But this has already started quite well. Amazon up 20% for a £751 gain. Now let's have a quick look at this. For the year, up 20%. Now for a Mag 7, is that good? Maybe people are saying this is the next one that's potentially going to break out. I'm hoping that it is. It's not the biggest holding of mine, but it'd be nice to see it going up. Elgen, hold on, that's more or less the first loss on my portfolio so far. Now that Rio Tinto is gone, I'm getting close to an all green portfolio, which I've never had. So let's see if this one can recover. Down just £100. If you add the dividends that I've got from this stock, then I'm up overall. Centrica up 51% for a £1,000 gain. Costco up 17% for a £344 gain. Apple, which has done well recently, actually. So over the last 3 months, it's up 22%. Currently, share price is at $245. They recently released the latest rendition of their iPhone, which has had some mixed reviews, but this is my current holding. So my average price is $186, currently trading at $245. I've reduced quite a lot of this holding because it has underperformed in relation to the Mag 7, but I still have an interest in it just because I think Apple does do good products overall. It's just there's not that much innovation left anymore. Now the next one, ASML. This company has been down for a long, long while and is finally profitable. I have been saying this on my channel. And if I didn't have such big holdings in other semiconductor stocks or that industry, for sure I would have been adding heavily to my ASML holding. So I had a fantastic week, up almost 15%, which has finally taken my holding into profit. Look at this. I spent ages at a loss. And now it's up. I said it every single week. It was a mystery to me why this company was doing so badly in comparison to the rest of its industry, especially when it's quite pivotal, and now it's starting to catch up. So yeah, not the biggest holding of mine, but it's good to see it in profit, and similar to KLA, another semiconductor company. So I've got quite a few. That's one of the reasons why I haven't loaded up on ASML, which I would have done otherwise. But this one is up 26%. So yeah, that's it. As you can see, the compound effect is really taking shape here. Look at this. It's really going up right now. Getting close to that 100% rate of return on the overall, which will be really nice to see. Thank you very much for watching this video. Subscribe so you can follow the journey, and I'll see you on the next one.